Hey guys, well, I'm here to introduce some of our Victorian brothers and sisters out of the YBR family. So we have Mandy Charles. She's from Frankston, our Frankston branch, which has been around a long time, our Frankston branch. One of our first branches, I think, in Victoria. Would that be right?
Yes.
One of our first branches?
Yeah, definitely, yep.
Frankston being, for those people who are not from Victoria and maybe from New South Wales or from Queensland, Frankston's sort of an equivalent in like in Queensland, probably to somewhere out west of Brisbane. It's sort of, but a big up and coming area now, like starting to get quite expensive. In Sydney, it's a bit like Midwest Sydney, which might have been a little down market at one stage. The socioeconomics of Frankston, they were changing a bit like Sydney Midwest, starting to get quite expensive. We've got Joe here, Joe Reilly. He's from Phillip Island. Now, I only opened your branch a little while ago.
Yeah, just 12 months ago.
12 months ago, is it? Yeah. So I seem to remember being down there, opening the branch up, and Phillip Island being made more famous more recently from the TV show The Block. That's right. And in fact, they were filming down there when I was down there.
Yeah. Just it's just before the auctions.
Just before the auction. Yeah, I remember that. And we've got Paul Farley here. Paul's from Ballarat, which is the sister city to Bendigo, I guess. They're on the ones, but you're on the Mexican side of the border. And
I'm from Bendigo.
Are you from Bendigo?
I'm from Bendigo. Yeah.
Originally, yeah. There you go. Well, that's a good counter argument.
Yeah.
We've got it right there. And anyway, but I really welcome you guys, and thanks very much for coming up to Sydney for this. A lot of people. So we got, let's call it, 2 regional representatives and 1 city representative, not city, but like a Melbourne representative, Metro, for a better way of putting it. You guys been in business a long time. You understand the mortgage market. You understand brokers, how broking works. You understand how banks work. You understand a fair bit about the property market. We're not here giving property advice, but we are here to talk about the process of getting a home loan. It sounds a bit commonplace and trite to lots of people, particularly us. But there's so many people out there got not a clue what to expect. And even people who borrowed maybe 25 years ago, who might be selling their house now, they're getting divorced, or they're sick of living in a big joint, they want to get a smaller place, want to borrow some more money, go through the whole process again. The world's changed. So what your borrowing process is, particularly, and I want to see if there's anything different in the regional areas compared to the metro areas. So where do we start? Like let's say I'm going to buy something in Frankston, and I already live in Frankston, but I'm going to get another joint. I guess the average price of a home in Frankston is probably $2 million or something. What would it be?
Yeah, 1.5 to 2.
1.5 to 2. So, I've got $300,000 deposit. How much deposit would I normally need to be looking at? What percentage?
So probably 5%.
5%. That's
10%,
the minimum.
Yeah,
that's the minimum.
10%. Yeah, if you've got 20%, obviously, then you're not in lender's mortgage insurance territory.
So you might explain that. So if I've only got 5% deposit, there are lenders out there who will lend me 95%.
Yes.
But I got to pay the stamp duty?
Yes.
Okay,
definitely.
So what sort of stamp duty are we looking at in Victoria?
So on $1 million, you're probably looking about...
What's the range? Just percentage-wise, like 3.5 to 5%?
Yeah.
Around that sort.
Yeah, definitely,
right.
yeah.
So I'm going to live there, so I'm not going to get hit up with land tax. So I'm not going to rent it out. At least that's what I'm going to tell them. So I'm looking at a place for $1 million, $1.5 million average price.
Yep.
Let's say I've got 5% deposit, which is $75,000. Yep. I've got to pay another 3.5% of that. Another $20,000 in stamp duty. And I come along to you and I say, well, I need to borrow the balance.
Yep.
What are the things you're going to ask me for?
So if you're self-employed or...
let's say I got a salary at the moment.
Salary, yep. So pay slips, either an income statement.
How many pay slips?
Latest 2.
Last 2 pay slips.
Yep. And they've got to be consecutive as well.
But do employees give you pay slips anymore? I mean, I remember when I went to go work in the factory, they used to give me an envelope and there's a pay slip in there, a little piece of paper, like a little skinny bit of paper, and my money was in cash.
Don't see that a lot anymore.
What's a pay slip look like?
So electronic. So most of them get emailed out to the employees now.
Like when they get paid, they get a pay slip emailed to them.
It's supposed to be on the day they get paid.
Right.
there is still some employers
So you
out
want to
there
copy that email?
Yes. Or,
The
yes.
last two.
Or that's normally in a PDF form or something
Yeah.
like that, so they can send those through to us.
Right. So that's the first thing I do, make sure I can get my hands on.
Yep.
What about if I'm self-employed?
So self-employed, it's either obviously individual tax returns.
Let's say I haven't done them yet. I'm really busy plumber and I haven't got around to doing them.
So we can use your quarterly BAS statements. Hopefully you're up to date with those.
Yep.
Some people aren't. But
What about if I'm not up to date with my BAS? Is there lenders who will still lend me money?
potentially. I haven't had any of those, so...
Yeah. Generally,
What about accountant's letter? What about if I get a letter from my accountant?
Yes, yep.
It says,
So-
oh, yeah, Mark's good for it.
Yes. Then there is definitely lenders out there that will... but some accountants, aren't liking to do those at the
No.
moment, but they are. Yeah, there are
But-
lenders out there that will accept them.
And some of those lenders have a format. They say, look, go to your accountant.
Yeah.
Here's a letter I want your accountant
Yeah,
to
and
send
they'll
me.
actually give a template.
A template.
Yeah.
And if your accountant's prepared to sign that, then
Then-
me, the
yeah.
lender, I'm prepared to lend you the money.
Yeah.
That's 5%. What are some of the hurdles that I'm going to come up against there? Like for example, you mentioned mortgage insurance. So,
Yes.
do you get many of these mortgage insurance deals?
Look, nowadays with a first home buyers guarantee scheme, it's the government's actually waiving.
That's the federal government.
Yeah. And also down in Victoria,
But it's only for first home buyers.
First-time
though.
buyers.
yeah. And also they can qualify for waiver or reduction of stamp duty depending on how much they purchase.
That's
for.
Victoria, yeah.
Yeah.
But there's a limit on it. So let's just because I don't want to get ahead of ourselves just a moment. So let's look at the mortgage insurance, lender's mortgage insurance.
Yep.
So lender's mortgage insurance, as I understand it, it doesn't mean you the borrower getting insurance.
No.
The lender's getting insurance.
Yep.
Yes.
Because you're borrowing so much money,
Mm.
or you only have such a small deposit, the lenders feels like they're at risk.
Yep.
Yes.
So the lender says, I'll lend you the money, Joe.
Yep.
But I'll lend you 95%. As long as you come up with a 5% deposit, it proves me you got it.
Mm-hmm.
I've got to make sure that you can service the 95%. You got to pay the stamp duty,
Mm-hmm.
or you might be exempt if you're buying your first home,
Mhm.
assuming it's a certain type of price
Yep.
and all that sort of stuff. But in order, if I'm going to lend you the 95%, something could go wrong. So I'm a bit nervous. I'm the lender.
Yep.
I'm a bit nervous. What you're going to do is you're going to take out what they call LMI, Lender's
Mhm.
Mortgage Insurance.
Yep.
And basically what that means is if you, the borrower, default, in other words, can't make your payments, if something happens, and me, the lender, I can say to the insurance company, pay Joe's loan out to me.
Yep.
And what happens is the lender sells your house, and let's say the loan's 950,000 in the example we just gave, but for some reason they only sell for 850,000,
Yep.
whatever the reason is, market dives. The insurance company pays me, the lender,
Yep.
that 100 grand shortfall.
Yep.
So I'm not out of pocket.
Yep.
So for that transaction, the insurer wants to be paid a premium, like every bloody insurance policy.
Yes.
Yeah? He wants to be paid in premium.
Yep.
Now the the lender is the one getting advantage of this, so
Yep.
they have to pay the premium. But what the lender says is, you the borrower, you're going to pay it.
Yep.
You reimburse me.
Yep.
And there's a whole range of upfront payments. It's quite a lot. I mean, the more insurance you take out, in other words, the larger the amount of money you borrow,
The higher it is.
the higher the premium. And it's actually quite exponentially higher. It's not
Yep.
like a little bit higher. It goes quite a lot.
Yep.
And it starts at 80% plus.
Yes.
So if a lender lends you more than 80%, 80.5%, you will pay lender's mortgage insurance
Yep.
for that lender's risk.
For the majority of the lenders, yeah.
Yeah, for the majority,
Yeah.
most lenders, yes.
Yeah.
And it goes, and it gets exponentially more and more the premium as it gets closer to the 95%.
Yep.
You tend to find it works in increments of, 2%.
Right.
So 80 to 82, the premium will be sort of very similar on the same loan amount. And then 82 to 84, it'll go into a different parameter. So
Right. Every 2% it increases
correct. Yeah.
disproportionately.
Yeah.
Mm.
Yeah.
Quite a rapid clip.
So you might find if you're borrowing 81.9% and 80.2, the premium might be very similar,
Yeah.
slightly.
But if you're paying 88, if you're borrowing 88%, it's quite a significant jump.
Correct. Yep.
So Mandy, just going back to your client,
Yes.
in this case, it's a hypothetical one. Going back to your client. So your client's borrowing 95%. They've got the stamp duty, the 20 grand, whatever it is. They've got the deposit, which, like it's not that much. It's, 5%. You're going to try and find them a lender for 95%. You've told them that, by the way, you're after mortgage insurance. We'll put aside the federal government's stuff for the moment because that's for first home buyers only. We'll come back to it though, because I think it's important to talk about it, Joe. You're going to say, okay, you've told the client the sorts of things it should expect from the various lenders. What do you do? You said, look, I need your pay slips, but what else do you do? What are you going to ask me to come up with? Assuming it doesn't matter whether I'm employed, self-employed, or whether I'm working for a wage. Apart from pay slips and maybe an accountant's letter or my BAS statements.
So we need proof of your savings, so bank statements.
So that you want to make sure that 5%
is actually 5%. Yep, and then some lenders you have to save it over a certain period. Most of them are 3 months. Some straight, as long as you've got the money in your account, then that's okay.
What about if my dad gave it to me last week?
So they just need to sign a gift letter to say that it's a gift and you don't actually have to pay it back because they don't want it to be a loan because then that obviously will affect servicing and things.
But when you say you want me to, when the lender wants you, the broker, to prove that I've saved it over 3 months, but they're looking for me to put in there, 15,000, whatever, a third.
Yeah.
Is that what it is?
Yeah. So it's just to show that basically you can save, so it shows that you can make repayments.
Right.
If you can put money away for 3 months, you can potentially, is their understanding, make the repayments on the loan.
Yeah, so they're saying your behaviour in the past indicates your behaviour for the future.
Yeah.
Because your behaviour for the future is for the next 30 years, you're going to pay me every month.
Exactly, yeah.
And by the way, these are 30-year loans.
Yes. There are some lenders that will do 40, not very many of them, but these are majority 30-year loans if that's what the client obviously wants to go with. They can do less if they need to, but most banks are 30 years.
Yeah, they all start for 30 years.
Yeah.
You can pay it as fast as you want, but they all start for 30 years. So okay, so the mortgage, and now I'm up for some mortgage insurance. Because it's not my first home, I've got to get the 5%. I've got to pay my stamp duty.
Yeah.
I've got to give you my pay slips. I've got to prove where I got my 5% from.
Yep.
And if I didn't save it myself, I've got to be able to get a letter from my dad or whoever it is, a gift.
Yep.
And that it's doesn't need to be repaid.
Yeah. If you've got any other liabilities, so credit cards, personal loans, tax debts, HECS and help debts now. All of those type of things.
Do you guys, so Joe and Paul, do you have like a template? Would you give me a template? Say, listen, here's all the liabilities you need to tell me about. I mean, because you might say to me, have you got any debts?
Yeah.
Mark, do you have any money?
You got to be open with them to say, look, you need to be upfront with us because nowadays with everything's electronic. Lenders find out, if you've got an afterpay or payday loan or whatever, they'll find out. You can't
this stuff is all available to them.
Yep.
So what happens if I don't tell you about something?
We've actually got a duty of care to actually go through your bank statements and actually check to see if there's any other liabilities that you might have forgotten. Some people do forget that they've had a credit card from 5 years ago and they don't use it, but the lender still sees that as a potential debt.
But if let's say I don't use it, why is the lender interested in me if I don't use my credit card?
Or you could walk out the door and
use it.
Use it.
So we'll say, okay, so the lender's trying to work out my potential debts.
Yeah.
In that regard.
Yep.
So let's say my limit is $100,000 on my credit card.
Mm-hmm. That's going to affect your borrowing capacity.
Why?
Because you could walk out the office that day and buy a car.
So what should I do, Paul? What would you say? Get rid of my card credit?
Reduce the limit, potentially.
How can I do that?
Yep. You can go online to the bank or make a call and then they'll reduce
cancel it.
You can cancel it.
Because I'm not using it.
Yep.
Because Joe just said it might have been sitting in your drawer for a year or two and he never used it.
And the comprehensive credit reporting these days actually discloses all your existing liabilities that are open. So if you do a comprehensive credit report,
when does that come in? Who does that comprehensive?
Well, we actually do it. I generally find that I do it on every application because then if there is anything undisclosed on the application, I can pick it up on the comprehensive credit report.
So how do you get this comprehensive credit report? Does one exist for everybody?
Well, you can go online into Equifax and
you can or I can. On the borrower?
We can do it on behalf of the borrower.
Yep.
The borrower can actually go and do it themselves as well and get their own report.
So what will it tell me?
It'll basically tell the conduct of your existing liabilities. So if your existing liabilities are open, it'll have a bit of a 12-month to 18-month history on repayments and whether those payments are met and up to date.
Right.
It'll also disclose.
How does Equifax know this stuff?
Everything's electronic
Yeah.
nowadays.
So everyone's reporting to everybody.
Yeah.
It'll have the lender. It'll have the limit that's in place, the conduct. It'll also
When
have.
when it says the conduct, does it say, does it give you a judgment? Conduct being good, bad, fair, or
It'll just basically say that if the conduct's correct, then there won't be any implications. It'll just have a 0. Then I believe if you're 1 month behind, it'll bring up 1. 2 months behind on the payment, it'll have 2, and then obviously lenders will look at it differently when there is bad credit.
So it's important to make sure that everything's in order before I even go and see you guys.
Yeah.
Or before you guys put my loan application at least.
Yeah.
And it'll also have, like, we find that on that comprehensive credit report is that it has a list of every inquiry that you've made. So if you've applied for a loan with a previous lender, if you've applied for car finance, credit cards, it'll all have those inquiries on there. So when those inquiries start adding up over a short period of time, then your credit report or your score will actually come down.
So what's a reasonable score? What are you looking for?
Oh, look, anything from 600 to 1,200, probably that higher 800 to 1,200's good score. Anything under sort of that 600, there's obviously maybe some issues around the.
Where's the sweet spot, Joe? Like, where do you like to, when you do the look at it and it says 750? I mean, is that your sweet spot? You go, well, that'd be sweet.
Look, obviously the higher the better, but you prefer it to be sort of above 600.
Right.
Now, that's not saying if it's below that we won't be able to help you. We've got to see what the story is behind the issue. It could be that you've had an unpaid bill from Telstra from 5 years ago.
You might not have even remembered.
Exactly. Yeah. So we can address it then. There's actually businesses that can actually get these judgments taken off your credit file as well.
So you can get your credit record cleaned.
Yes. Yeah.
Yeah. So do you know who they are? Do you recommend these people to your clients? I mean,
yes, and I can't remember the name off the top of my head.
So there's a credit
Credit
fix is
fix.
one of them.
Credit fix is one of them.
Solutions. Yeah. Yep.
But there's lots of them.
Yeah.
But when they come in to see you, if there's a drama, you say, listen, I've just checked your Equifax file and, there's something you didn't pay a long time ago or it says you didn't pay a long time, but you might have paid it. I'll put you on to someone who can go and sort that shit out.
And these guys will actually contact the client and they'll look at the scenario and see if they can actually help you. They'll know if, we're pretty confident we can get this removed, and then they can look to fix it up for you.
So what we're sort of getting towards here looks to me as though importance of going to see a broker is there's a lot of tricks and traps for a borrower because if you go straight into the banking system and
most of the time they'll see your credit history and if it's low or if there's defaults or late payments on it, they'll just decline you straight away.
Let's just open that up a little bit.
Yeah.
So I decided I'm not going to go to a broker. I think, I've got a bloody good bank manager, or I know someone you would know the bank manager because bank branches don't even exist anymore. But I've always been with this bank. I'm going to go with them. Okay, I'm just going to make my application online, and which you can do these days. And I'm not going to use an online broker. I'm just going to use an online bank. I'm going to go through one of their portals. I'm going to go in. I'm going to do all this stuff, and all of a sudden there's stuff I've forgotten about. And they come back to me and say, sorry, Mark, you're declined. What does that mean for me?
Well, obviously they're not happy to help you, but there are other options out there. We don't just deal with one lender.
No, you just 1 second. I'm not going to see you.
Yeah.
I'm just doing it myself.
Yeah.
What's the
so the decline
risk
goes
of that?
on your credit history.
So that decline, because I'm thinking I can do it myself.
Yeah.
And it goes on my credit history. Where?
So it shows up on your inquiry.
Yeah. Where does it show up on my inquiry? Is there some independent mob
on that credit
on that credit report?
On the comprehensive credit report.
Yeah.
Yeah.
And it says, Mark made an inquiry with so-and-so.
Date, the loan amount.
Declined.
It won't say decline. On the
actual credit report.
On the credit report, it'll show an inquiry, but it won't actually give you the outcome.
So then, but I've done that, and I've tried to borrow $950, and obviously I know I've been declined by the bank, so I go along to another bank, and I say, oh shit, that didn't work. I'll go along to the next bank, pick another one, and
so each time you go to the banks, your credit score's coming down.
Will they ask me? So given it was declined, will my credit score come down?
Yes.
Yeah.
As long, Every time you do an inquiry,
if you do multiple,
in a short period of time.
Yeah. And they will potentially ask you that you've made an inquiry.
At this first bank?
Yes.
And they say,
they maybe look at it and say, what was the outcome of that?
Right.
And then you obviously would have to
tell them the truth.
Yeah.
Because they can find it easy enough, I guess.
But, but look, some lenders don't even. If you get a decline, they might not even tell you why they've declined it, as in give you a reason for it being a credit issue. Right. They will just show that it's declined and doesn't meet their policy.
Because what I'm trying to get to is, why is it better to go to you guys instead of going direct?
Because we see the credit history up front. So if there is issues with it, we can then find a lender that potentially still can help you. Or if there's no issues, then we can find the best option for what is your circumstance at the time.
But
with all different lenders.
Is it faster, smoother, less hassle?
Well, instead of you walking from bank to bank to bank to bank, you've wasted your whole week basically looking. Yes.
You've multiple inquiries.
we actually look at your scenario, your story, what you're trying to do, and we'll work out where's it going to suit you best. And we actually look at these banks' policies to make sure that you're going to fit inside those policies.
So, and I think it's important to note that, for us to talk about this now, is that guys like you have access to our selection panel
of lenders.
We have a panel of lenders. All the policies are sort of built into an engine, a search engine, let's call it, which once you put the details in, it should actually spit out a couple of lenders for you relative to your circumstances, to your credit profile. And then you guys would say to me, the client, look, Mark, here's 2 or 3 options for you, and you can explain the options. I'll make the end decision, and then you'll then submit it for me. But I think what we're trying to get to here is just to stop Mark, me, the borrower, from stuffing it up in the first place.
Correct.
That's the deal.
Yeah.
And because it's funny, most of us just think it's just about getting the best interest rate, but it's not. It's a lot more other stuff involved, isn't there? Yeah. What other stuff are we talking about?
Well, look, I suppose what we also look at is that, if we're able to secure a loan with a lender that helps you with if there is bad credit, then we try and get, if we can place that loan, it might be a slightly higher rate, there might be a risk fee dependent upon the lender, etc. But if we can get you 12 months, 18 months, good clear history, get your credit report back, get everything in line, then there's no reason for us to not be able to put you back into a mainstream lender at a lower rate or something like that.
Yeah, so it could be my first step back into being in the good books.
Correct. Yeah.
So I get an opportunity to clear my name and to have a clean report. And have had a good behavioural history in terms of this particular lender that I'm going with.
Correct.
But equally, it might be, and this happens. I know it happens. There might be someone with a real hot rate, but they might only want to lend to people who are borrowing 79%.
Mm-hmm.
And we see I'm sitting in the lounge room with my family, and I see, wow, that's like a really cheap rate.
Yeah.
But they don't say, but only lend
60%.
Yeah. So, in those circumstances, I'm wasting my bloody time because I say to my partner, okay, I'm going direct tomorrow. I'm going to fix that. I'm going to go online and sort that out. And all of a sudden, I'm borrowing 95% or 85% or 81%.
Yeah.
You don't qualify. Sorry, Mark. And I get a decline. Straight up, because I'm trying to borrow too much.
Yeah.
So, and then other ones that might have a really hot rate, which I've heard of, where they're so bloody busy. I'm settling next month or 3 weeks' time, but I'm going to put me on a queue.
Yep.
Does that happen?
It does, yeah. It happens a lot. So they get inundated with the good rates, a lot of lenders, and they're advertising, and then a mass volume of loans go there, and then their SLAs blow out.
SLAs being
Service levels. So
the time it takes to approve.
Yeah, correct. Yeah. So basically,
Because they're just busy.
Correct. Yeah. And they can blow out, I've seen them blow out to 20 plus days.
Yeah, and that's pretty nerve-wracking, particularly if I know I've got to settle.
Yeah.
Or if I want to refinance for some reason.
And this is just purely for approval or pick up the application.
Yeah, it's not. That's right. You're right. That's interesting. It's not money is ready to be deployed.
No, that's right.
It's so okay. So so I've decided I'm going to go to a broker, one of you three, and let's say you were saying, Mandy, I've got to give you my statement of liabilities. I've got to give you my pay slips.
Yep.
What about things like how do you work out how much I can afford to pay every month? Like my servicing ability.
Yep.
How do you work that out?
So,
not you, or how do the lenders work it out?
Yeah. So it's all to do with how much your income is, and then obviously minus your liabilities, your living expenses.
How do they work out that?
How long's a piece of straw? So the government has what they call the HEMS, which I don't.
Well,
it's household expenditure.
That's called household expenditure methodology.
Yeah. So which, if you're a single female that earns this amount of money,
living in this postcode,
you should spend this amount of money each month.
We, the government, give this to the banks, and the banks will make an assumption. This is how much you spend.
This is how much this use, and most of the lenders are a little bit different.
But that's a good starting point.
Yeah. So so it's your income, your living expenses, then your liabilities.
So there's an assumption of your living expenses.
Yeah.
But do they check your actual expenses?
So we check the bank statements. Yeah. So we normally would get a everyday bank account that normally your wage will go into. So then that most people will spend from that account. They may go to savings accounts as well, but most of the spending will come out of where the wage credit goes to.
What do you do with that information when you check their actual, Joe? What do you do?
We just make sure what you're disclosing to is correct. Now,
what happens if my actual expenses is lower than this assumed expense?
Very hard to go to the bank and say, look, household expenditure is saying it's $4,000 a month, but they're only spending $3,000 a month. It's very hard to get the bank to reduce that down. You'd need to put a very good case to them, and they'd have to sign off on it.
Okay. What happens if it's the other way? Let's say my actual expenses are $8,000 a month, and the HEMS is only coming up as $4,000 a month.
Yeah. You might need to have a chat to the client and say, look, you're probably living above your means.
Yep.
Need to sort of, get you ready to buy property. We need to sort of guide you in, maybe reducing your commitments.
And I'm an Uber Eats guy. I mean, I'm sitting there, I order it every night, every lunchtime. I like to have a bet, have a punt. And I've got a betting account, for the AFL because I follow Collingwood, and I'm losing all the time, my money, and I'm catching Ubers everywhere. And I've got all these accounts. They're coming through my bank statements. And what would you say to me? Hey, Mark, just pull up for 3 months and come back in 3 months.
3 to 6 months. Just
clean up.
Reassess it. Yeah. It's not that doesn't mean we can't help you. It might just mean you might need to wait a little bit.
Because I think what you're saying, guys, is this: if my expenses relative to my income are too high, it means that I probably can't borrow the amount of money I want to borrow. I can borrow something, but it's not enough.
Yeah.
But there are cases where you have, for 3 months, you might have had, let's say, for example, you don't have a direct debit for your insurances or something like that. So you pay them annually in one lump sum. Or if you had a holiday and you got flights, accommodation. So maybe for those 3 months, your expenses are a lot higher than what they normally are. So then, there are cases where you can mitigate around that. What's the story? Why are they higher?
Do you have to report this to the bank?
Yeah.
Yep. So that's part of your duty.
Yeah.
Your legal obligation to report this to the bank.
Because if they're declaring $4,000 a month, but for the 3 months it's $8,000, $4,000, but we've got $4,000 worth of expenses that aren't usually there in those
You
3
pay for a
months.
funeral or wedding or something like that.
Exactly, yeah. Then we can mitigate around that, and then they can bring it back.
So you can help guide a proper process
Correct.
for a proper judgment to be made by the lender.
Mm.
So maybe you could explain to me when the approval comes through, does it work like this? Do you guys put in the application and say, oh, Mark wants to borrow $950, or do you put in the application and say this is his living and expenses and his wages and his income and all that sort of stuff? Bank, how much will you lend to him? How does it work?
We've usually got a pretty good idea of what
How
your
much you-
borrowing capacity is going to be.
You can do the calculations.
We've got access to a calculator that, you know, we plug in your information and it'll tell us what bank will lend you what amount.
Yep.
It's not exact to the dollar, but it's pretty close.
Right.
So we've got a fair idea if you're going to fit in that space.
Right. So that's interesting. So, but if I'm trying to borrow $950, you can pretty much say, Mark, you're not going to get $950. You're only going to get $850,
Mm.
unless you start changing your spending behaviour.
Yep.
So you say that to me, right? You say,
Yep.
Mark, all those Uber Eats and all that stuff you're doing, the betting and all that sort of stuff. Mark, right at the moment, based on what I can see for your actual expenditure, you're only going to get approval for $850 from most of the lenders, but I want $950 because they probably want to buy $1 million plus.
Yeah.
$1 million
And
bucks.
it's also falls in where, you know, people are dead set keen on living in a certain area and their income's not there to support buying into that area. And you've got to say, look, okay, you can wait another 5 years and keep saving, or have you thought about
Another area.
moving another area?
But let's just cast aside for a moment, or park the income. Let's just talk about the expenses. You can see that my net income, because it's about your net income, so in other words, what you earn minus the tax, minus your expenses. And I've been a little bit like having a great time, and you say, Mark, you can only borrow $850, but if you reduce your expenses, cut Uber Eats, cut the gambling, cut whatever, I reckon you can probably borrow the $950.
Mm.
What happens? Will you send me away and put me on a plan, or not a plan, but how does that work?
Look, at
You
the end of the day,
cancel my subscriptions. What do you do?
yeah, look, at the end of the day, look, what we put up the case for, the lenders want to see that you can actually support that debt. Okay, now if they see that, up until last night you're still living that high life, they're going to say, well, hang on, no, you can't afford it.
What would you do? What would you say to me though?
Well, we'd say, look, if you can reduce your commitments down to X amount, this is your borrowing capacity is going to go
level?
is going to go up to X amount.
Yep.
So we give you an idea of where you need to be able to get what you need.
And it means I've got to cancel things.
Possibly.
Because I might be on Netflix, I might be on Paramount, I might be on
Yep.
Disney, I might be on Apple, iTunes.
But not also you might be able to, if your expenses are higher for those 3 months and with those commitments, if you come back in the, if we say, look, let's just review it in 3 months' time, and you can show that, all right, well, I've cut my spending back by, let's say $3,000. And I've managed to put an extra $3,000 in savings to offset against what I've been spending, then the banks will also look at that and say, well, look.
But is that the time to come to you guys? Like I do it in the beginning. You tell me I can't borrow $950. I'm going to only get $850. I go back and I cut a whole lot of things out, cut up a few credit cards, ring up, cancel it, and I come back to you guys. And is it 3 months, or can I just do it if I clear it after a month? What's the general rule of thumb? Like a rule of thumb.
I think we just monitor it. I would normally say 3 months.
Yeah.
3 months would be and look, 3 months goes very quickly and it gives you a good idea. Everyone could sort of cut something off for 1 month, but 3 months.
But it could also be that, you might have a $100,000 credit card that you don't use and you get rid of that, your commitment comes right down.
So
we can look at all that as well.
So Joe, what I'm getting here is before we put the application in, with you guys, is that with the banks, but just talking to you guys at the moment, is that the things that can affect my ability to borrow the $950 and might end up meaning I can only borrow another number lower, my expenditure, and what can I cut back on?
Yep.
My liabilities,
Mm-hmm.
whether I've used the liability or it's an unused liability. In other words, it's available credit.
Yep.
And obviously my income. Now, my income is my income. Like, I'm not going to change that overnight, but I can change my expenditure.
Yep.
My income's pretty fixed unless I've got some sort of magic wand. I'm going to get a new job. I might be getting a new job.
Yep.
So how long, in terms of income, what sort of period they want to see that income for, like your earnings?
Look,
for?
if you're in the same industry, it's usually okay.
Well, let's say I'm working as a stockbroker and I go from one stockbroking firm to the next, but the second stockbroking firm I go to is more money.
Yep. Great.
And they pretty much accept it straight away. But let's say I'm a stockbroker, but I go from being a stockbroker to
a heart surgeon.
No, that's sort of unlikely.
Yeah, but that's a different
Just
field.
a different niche.
So they want to see a history of that income.
How much history are we talking about in the new income, the new industry?
So you're looking probably 3 months.
3 months.
Yeah.
Yep. They want to see I can hang in there for 3 months and
Yep.
get paid for 3 months.
Yeah.
Okay, that's cool. I was going to say I'm going from being a stockbroker to go work for the AFL. That's probably a bit more realistic.
Yep.
But I'm going to get a better earn.
Yep.
And I've always wanted to work the AFL, but you're going to have to be able to produce 3 months worth of pay slips to show that you're not a fly by night sort of dude, and that, that I can actually hang in there at the new job, and that they think I'm good too.
Yep.
So, okay, we've done all that. We now know how much money we can borrow. My credit's okay. I've got a fairly good score. Don't have any negative stuff. I've given you the information. I've given you my pay slips or my credit card information or my day-to-day bank account information. I've got my money saved up, got my deposit, but approved my deposit. What's next? I've said, put me with that lender. In your case, it could be Bank of Melbourne. It could be, one of your Melbourne banks. It could be, by the way, it could be a bank in Queensland. You guys don't care.
Yep.
Money's money. I've always said, who cares where the money comes from?
Yep.
Money, there's no Armani dollars, no designer dollars. A dollar's a dollar. It doesn't matter who the lender is. And so you say, well, Mark, what about this one? That's the loan I want. I reckon they're good. Let's go for them. You say, because I reckon I can get to the whole 950. What's next? What do you do next? What do you do next, Andy?
Yep. So then obviously application forms need to be signed so that the bank knows that you're okay with going with them, and then we submit your
You
application.
have to verify who I am.
Oh, yes. We potentially should do that first. That would be part of when we're doing your living expenses and income and stuff.
So what do you want from me? Do you want my passport? What do you want?
Passport, driver's license, and Medicare card.
3 of them. Yeah, so you have to verify me before you submit an application to a bank.
Yes.
Do you submit the verification paperwork?
So we can. Some banks now with the digital side of things are actually wanting to digitally verify. So we still have to, with our compliance, get your ID, but other banks will then ask you to verify with them as well.
Right, okay. So it's a process.
Yeah.
And is it a physical one? Do they ever ask you to come in and actually...
No, so most of the banks will be digital online now, that you
Okay.
can just hold your driver's license up and take a photo and send it to them.
Right, okay, good. And now, so they know who I am.
Yep.
They verified that I am, who I say I am. I'm pretty much, I know who my lender's going to be.
Yep.
Looks okay. You're saying you fill out the application form, because there's still an application form to be
Yes.
filled out.
Yes.
That'll be an online form probably.
Yeah, most of the banks are doing that now.
You submit the online form for me, and what am I doing now? I'm sitting around and shooting myself. Like,
Yes.
How long am I waiting for?
Well, I suppose it's dependent upon the lender, and
Yeah.
that's where if we know what most lenders have their standard lending assessments times online. So we can sort of give you an indication of once we've submitted it as to how long it will take before they pick it up.
But do you know someone in the banks? Can you ring someone for like I put Mark's
Like an
application?
escalation or something like
Well,
that?
no, yeah, with that, or do they have business development managers who sort of do the rounds, come around to see you guys and say, listen, if you put a loan with Bendigo Bank, give us a call, because I'm from Bendigo Bank and I'd like to look after you guys. I remember on Phillip Island there was a Bendigo Bank there, wasn't there?
Yeah.
I mean, I think he came to your launch actually.
Yeah.
So like the dude.
Yeah.
And
But he's not the actual contact that we use. So you're right, each bank has a development manager.
right,
He was actually just the local branch manager.
right,
Okay. So if there's something that you say, look, I've bought this property and it settles in 2 weeks.
Yeah.
A lot of lenders won't even look at the application. for 2 weeks.
Right.
So that's when you'll ring up your development manager and say, look, I've got this file. Can you jump on it?
Right.
And try and
How do you
get it
get to
through.
know these people?
You deal with them day in, day out.
Do they introduce themselves to you? Or
Yeah.
You meet them at professional development days?
Exactly. Yeah.
Or you meet them at annual conference events that
Yep.
Most
we
of them will
hold?
come out
Yeah.
if you're not too far
They'll
away.
come out and knock on they'll come and knock on your door?
Yeah.
Yeah, okay.
Yeah.
Or they'll do regional visits.
Yeah.
Yeah.
And you get to know the person.
Yep.
So then you've got a number,
Yep.
a phone number.
Yep.
Because I'm never going to find out who these people are. I'm the borrower. They're not coming to visit
No,
me.
that's right.
No.
They go to visit you guys
Yep.
because they don't have branches. Effectively, you're sort of like a bit of a branch. Not you aren't, but you know what I mean. Like they know people come to you. You got physical branches. We should stipulate this right now. Actual physical branches, which exist. A place where me, the borrower, can come and visit.
Yeah,
correct.
I don't think I've been to yours. I've been to your two. Haven't been to yours for ages.
No.
You might have changed address since I've been there last.
Probably they've changed a few times.
Yeah.
Yeah.
But I definitely was yours only a year ago.
Yeah.
So I can actually go in and talk to someone. Like there are people in there, like old
Physical
school,
person.
actual physical, real
Real
people,
person.
real people. So, but you, on the other hand, have access to someone on the phone.
Yeah.
Yes.
And
So
that's
if there's a deal that there's something that's not quite right, you can actually workshop it with them before
good.
you even submit it.
Yep.
So, and the BDMs are usually pretty good if they say, look, there's definitely a deal there.
Yep.
If they need to, they'll get in contact with a credit officer and try and nurture it through as well.
right, because they're not a credit officer. These people.
No.
They're not approving it, but they know what
But
works.
they know what's working.
Yeah.
Yeah.
Okay, so the deals. Let's say the deal's submitted, and we waited the time that a couple of weeks, whatever it is, or you've had to hurry it along.
Some lenders are within 2 hours.
Yeah, I know. One lender's very, very quick.
Yes.
But generally speaking, they're looking for your gold-plated stuff. They're looking for someone who's borrowing less than so much, has a good credit history, they've got no crap going on. Everything's got to be pretty sweet.
And that's dependent on the lender. Yeah.
Yeah.
Correct.
Yeah, those lenders, they're not.
Yeah.
If there's any little thing that's a bit tricky,
And it's the quality of the application that you submit. So you get all your if you can get all your information together and gathered and it's all correct, there's no reason why you can't submit it and get an approval back on one touch. And that all comes down to your ability to get the application correct the first time.
filled out well.
Yep.
So, deals approved, loans approved. No real conditions on it. What happens next?
So nowadays, most lenders are electronic, so it could be within an hour. Your loan documents would be issued to the clients. They can sign them electronically. Obviously, if you've got a purchase involved, you need to get a conveyancer involved as
Or
well.
solicitor.
Yeah, to help through to settlement. And that's something that we deal directly with the conveyancers or solicitors as well, just so we might know that nothing's going to fall over.
In other words, the money's available on the day that the
Yep.
solicitor is going to meet the vendor solicitor
Yep.
and hand over the check.
Yep.
And the vendor or solicitor hands over the title. It doesn't hand over the title, but sort of does. Transfers title.
Yep.
So, but do you get involved in that stuff?
Well, we
process?
that communicating with the solicitors and conveyancers
Where-
is important.
You're involved in that role.
Correct.
Yeah, because you want to make sure that the money's available on the day.
And they want to know so they can then forward on the approvals to the vendors and the vendors.
And when do I pay the mortgage insurance? Which point?
At settlement.
At settlement. So I got to come up with a check at settlement.
It's actually usually drawn directly from the loan, so you've got to have the cash on top of what you.
So I've
need.
already got. I've got to have the money in the account.
Yeah. So a lot of lenders, you might want to borrow 95%, and they'll capitalise the mortgage insurance on top of it. So in effect, you're borrowing 97%.
I should say too, by the way, just for sake of clarity and completeness, that the mortgage insurance is not going to be incurred if you're borrowing less than 80%.
Correct.
The banks actually do have mortgage insurance, but they pay it themselves because it's not that much. It's a couple $100. It's only it's only when you're borrowing more than 80% that the mortgage insurance starts to click in, where you've got to pay it. That's a big difference. Before settlement, do I have to show to the bank anything? Do I have to insure the building? Or what point do I have to insure the building? So I'm buying a joint of exchange contracts. When is that building my liability?
Yeah. So you need to insure it. The lenders will actually usually stipulate what it's got to be insured for.
How much?
Yeah, so the building component, and you get a certificate of concurrency from the insurance company to say that it's insured for X amount, and Westpac is a noted interested party.
Okay, so that's important, Joe. Like, so you insure only the building. So you might have bought it for $1.5 million, but the building might have been $500,000, the land might be $1 million. And you get the insurance certificate that says, look, Mark has insured this building on this property for $500,000, and we, the insurer, note that the lender is Westpac in this example, and Westpac's just known as a lender in that agreement. What do I do with that insurance policy?
So we need to get a copy of it because we need to supply it to the actual lender.
Yep.
They won't settle without that.
Right.
That
Okay.
letter. Yeah.
Okay. So is there anything else I need to do before settlement, apart from the house insurance of the building?
Oh, you obviously got to arrange all your, moving and all that.
No,
but,
before settlement. Do I have to open up an account like with the bank to make sure we've got automatic payments?
If it's a new bank that you haven't been to, normally when we set up the loan documents, they'll set up
an account,
an offset account for you or something like that.
Yeah, there's an account in which I pay my payments every month.
Yeah. So we'll actually let the lender know that, okay, we want a loan for $950,000, and the client wants an offset account as well. So they'll actually set that up for you.
Right. So and you settle the way I go, and I'm happy, and I'm going to assume I can just continue to pay my mortgage, as time goes on, and my income stays where it is, and everybody's happy. What about if I don't satisfy any of the bank, the big banks? Are there other lenders out there that you can, the non-bank lenders? I mean, they're on our panel. I know we've got lots of non-bank lenders on our panel. What are they sort of there for? Like, when are they more suitable than, say, a mainstream bank or any bank for that matter?
Yeah, it falls back to, look, you might have had a credit issue, a default or something like that.
Maybe I haven't got my tax returns done.
Yeah,
or I haven't done. I'm a small self-employed.
Loans,
What do you call
like that. Alt doc.
What is it?
Low
Alt
doc
doc
loan.
mean?
So it's where you get the accountant to sign off on the declaration,
Right.
or you may look at the BAS,
Right.
sort of like that. Yeah.
Alternate, yeah.
So is this common?
Look, there's quite a few lenders that will do it.
Yep.
Yeah. So at the end of the day, the accountant's got to sign off on the income. The accountant's got to be happy that what you're
Your
declaring.
accountant or my accountant? Yeah.
The client's accountant.
Yeah.
So say they'll sign off to say that, look, Mark's on $90,000 a year. I'm happy to sign off on that.
Right. Okay.
Yeah.
And then these non-bank lenders will accept that as long as the accountant sort of signed off on it.
Yeah.
And everything else after that's pretty much the same. You still got to get building insurance. You still got to open up an account somewhere to make the payments, et cetera, et cetera. And do they charge mortgage insurance?
A lot of them will charge a risk fee, depending on.
So, but it's about insuring risk, or
Yeah.
make a payment for the risk.
Yep.
Which is what mortgage insurance is.
Yeah.
You're paying the banks.
Yep.
They just insure the risk.
Yep.
They won't take the risk unless they will not give you the money unless their risk is eliminated and paid for by you.
Yep.
Whereas these non-banks, they might not have mortgage insurance. They might not insure the risk, but they know they're taking the risk.
Yep.
So they charge you what is called a risk fee.
Yep.
Which is this effectively amounts to the same sort of thing.
Yeah.
It's a fee for risk.
And as Paul said before, look, you might be in that space for 12, 18 months, and then we can look at getting you back into the mainstream.
Yep.
It's for a purpose,
So maybe I wouldn't mind just knowing what's going on in each of your territory. So how's the property market performing in Frankston now? What are you hearing down there? I mean,
So in Frankston, getting a lot of refinances to upgrade.
Just get a better house.
Yeah.
In Frankston, or they're going
in
somewhere?
Frankston.
No, but Frankston borrowers moving out of Frankston, or
They're staying in
buying
Frankston.
a better house in Frankston.
But majority in the last few months have been first homeowners that are out in the Clyde, which is past Cranbourne area, because that's a massive growth area at the moment.
Yeah, it's a big growth corridor.
Yeah, so getting a lot of those for first homes, as well as just investments out there.
So are you getting a lot of investor inquiry?
Into Clyde around there, yeah.
Right. From interstate or local?
Local. local. So in Victoria, I wouldn't say out of Frankston, but yeah, in Victoria.
Victorians are
yeah.
looking to buy investment
Investment,
properties.
yeah.
Would you say it's higher than normal?
No, I reckon at the moment, obviously with the new government grants happening as of October,
You're talking about the first homeowner
the
grant.
first homeowner grants. That's what we're getting a lot of because they're buying land and building out there, all of the packages and stuff. So we're getting a lot of those at the moment.
Right, okay. So the first homeowners grant that the federal government has introduced,
Yeah.
alongside the first homeowners stamp duty concessions that the
Yes.
state government's introduced, or has been there for a long time, but
And because the caps and things are sort of come off a little bit, we're not just seeing the younger first homeowners. Like normally the first homeowners were younger getting in, but now we're actually getting, over the last few months, a few of the renters that now can get into.
Yeah, so the
buying
first
their
homeowners
first
grant
home.
is
Yeah.
available to first homeowners.
Yeah.
It doesn't matter whether you're 58 or
Yeah.
18.
Yeah.
Or 19. Whatever.
Yeah.
So
Yeah.
it's non-discriminatory.
Yes.
You could also be eligible for it if you haven't owned a property in the last 10
10
years.
years.
Right. So it's first homeowners means someone who hasn't owned a property in the last 10 years.
Yeah.
Yeah. Okay. That's interesting because you might have owned a property 10 years,
Correct,
11
yeah.
years ago. You might have got divorced.
Yep.
Couldn't afford to get back in the market. You've taken 10 years to recover. You and your partner now might be able to afford to buy a joint together, and both of you might qualify for the first homeowners grant.
Yes.
Basically, what that is, as I understand it, is the government is not giving you a grant, so there's no grant involved. It's not giving you any money. Basically, what they're saying to the bank, look, if Mark wants to borrow 95% and he's got the 5%, plus he's got the stamp duty, assuming there is stamp duty, but if Mark's got that amount of money and Mark's salary minus his costs qualify for that 95% loan, what we'll do, Mr. Lender, bank, or lender, or bank, we will guarantee that Mark will repay the loan. So you don't need to take mortgage insurance. Mark doesn't. So basically, it's not a grant; it's a government guarantee.
Yeah.
The government's guaranteeing the lender, the bank, that that risk that Mark presents for only having 5% deposit. The bank's going to cover the government's going to cover the bank for that, which means the bank doesn't ask you for any mortgage insurance. So I can see why that's become popular, and it's nothing to do with age group. Is it means tested?
It used to be on,
but it's not anymore.
They've reduced the income caps. Yeah,
reduced it. I think they've
eliminated.
They've reduced. They've eliminated. So the great thing about this is it's not means tested. So you could be earning, only have 5% deposit, and you could be earning $1 million a year, and only have $100,000 expense, net $900,000, but you need to borrow 95% of the purchase price because you just want to buy that joint now.
Yep.
The federal government will guarantee the bank that you're good for it for that 95%, and that Mark, you do not have to pay mortgage insurance. Yep. That could save me $20,000-$25,000.
Yep.
Easy.
Yep.
Which is great. So you're seeing a lot of that out of your area.
Yeah.
In Clyde, more around Clyde.
Yeah.
How about you?
Yeah, seeing a lot of inquiries now.
For first homeowners grants?
Yeah.
And what about you, Paul?
First homeowners and a lot of investors at the moment, interstate.
Are you interstate investors?
Yep, through buyers advocates.
Because come into Ballarat.
Yeah, because our medium house price is around $560.
Yeah,
so
affordable.
A lot of lending between $500 and $750 house prices in that market. We've got first home buyers and investors purchasing in that. So it's a bit of they're competing against each other essentially at the moment. So
right. Oh, that's interesting.
But obviously the first home buyers are sort of capped at that 650, but investors are coming in and they're buying off market essentially sometimes.
Yeah. So what we're just saying here is that the buyers agents are actually fitting their clients up to buying stuff into Ballarat because it's represents a good investment.
Correct.
Because it's pretty inexpensive. A lot of people get approved around that money. It's not that hard to get approvals.
Yeah.
But it's easier to get approvals than it is for a larger amount, of course. I guess what it means is the buyer's agents are sending them there to Ballarat or the surrounds is because there's a capital gain in it, or it's easy to rent them out.
Yeah, it's easy to rent out. And look, they're getting
there's a shortage.
Returns. Yeah, there's a shortage, yeah. And look, I suppose, as you said, it's affordable in that climate, 500 to, that 750 range. And there's a bit of an undersupply at the moment because they're buying so quickly.
That's interesting.
And getting first home buyers because they're trying to buy in that price range, and they've got interstate buyers coming in and buying investment properties. We need to make sure that we're getting the first home buyers prepared and pre-approved, ready to go, and guide them through there so they're not missing out on opportunities.
So let's just quickly talk about that. Maybe Joe, you can jump in here. The pre-approval process. So I'm out there hunting for a property. I want to buy, in Phillip Island or Ballarat or it doesn't really Frankston, wherever. And I want to. The auction's in a month. I've done already a couple of inspections. I'm hot on the game. What does a pre-approval mean? What does it mean?
Yeah, so it gives you a guide on, okay, the bank's willing to back me up to a purchase price of X amount. I know I can look in that market.
Because I know my deposit.
Yeah.
I know I've got the stamp duty.
Yep.
The bank's going to lend me on the example we had before up to $950.
Mm-hmm.
That means I can spend $1 million. And I now, how long does a pre-approval last for though?
Depending on which lender,
On average.
Yeah, it's usually 3 months.
Okay, 3 months. Okay, so they're all around 3 months. So I go in. I got a 3-month window to find the joint. Are there lots of people getting pre-approvals and not end up getting a property?
Yeah.
So what happens at the end of 3 months? What do I do? So my 3 months is just about to expire. Here we are, mid-November. My 3 months is about to expire. I'm going to take Christmas holidays. I want to go back into the market in January.
Yeah.
What do I do?
Yeah. Look, you just re-look at has their situation changed? Are they still working at the same place? Are they still on the same income? Have they still got the
Let's
same?
assume all that is a yes. What do I do? What do you do for me?
So if they're ready to go again, you can go to the lender and you can get extensions.
Oh, you get an extension on 3 months. But let's say it's expired already.
Yep.
Or should I get an extension before the expiration date, or should I just, or once it expires, it doesn't really matter. I can just go back and resubmit and
you can just get it redone.
Redone. Yeah. It's pretty standard.
Yeah.
Okay, because then I know they come, February when the market kicks off again, or when I'm ready to kick off again, I've got that pre-approval redone for me, and I've got it for February, March, and April, and I've got 3 months to go and find myself a joint, assuming that I haven't spent the deposit, assuming I haven't spent the stamp duty, assuming nothing's changed for me. My income's the same, my expenses are the same.
Yep.
Okay, so what are you seeing in Phillip Island and in your territory? Where do you extend to, by the way, beyond Phillip Island?
Look, we start from Cows and go up to just short of Turidan, so it's about 80 k's. So there's a big range in price difference from, over the whole territory.
Yeah.
Especially even on the islands.
So what are you seeing, though? What are you seeing? But lots of activity or slowdown or?
It's starting to pick up.
Pick up?
Yeah, it is.
Wow.
Yeah. It's look, the market did get flooded with, there's a lot of holiday homes on the island, and a lot of people are getting rid of them because, with the
land tax.
Land tax, yeah. So the market got flooded sort of probably 12 months ago. So there's still a lot of stock on there. So there is some good buys, but it's the lower end of the market. There's not as much, and that's, you find a lot of the first home buyers are in that lower end of the market. So there's competition to get into that. So it's ideal to make sure that they're ready. So look at doing pre-approvals, get them ready to go. So when they go and see an agent, they've got some currency behind them. They're not just saying, oh, look, can I make an offer? And, it's subject to bank finance, it's subject to this, it's subject to that. The agent knows that, okay, this guy's serious. Okay, this is a serious offer. They'll take it to the vendor. You've got more likely you've actually been accepted when you put your offer in.
So get sorted.
Yeah.
How you going? And your Frankston?
Yeah, so we've got probably the few customers at the moment that have not been able to find properties because there's not a lot. They're going so quickly. There's been a few lately that I've had to either reapply for, or they've actually come back and said, look, we know what we can do. Once we find it, we'll just put an approval in. Don't get us another pre-approval. We haven't changed anything. So they're willing to just put an actual approval in once they've found the property because they just can't find what they want at the moment. So that's a big thing in our area at the moment.
So refinancing was a big deal at the beginning of the year and late last year. Last year being 2024.
Yeah.
You see much refinancing?
Yeah, you still get a bit. You know, you'll find that still, and I don't know why, a lot of clients don't know what rate they're on.
Yeah.
You know,
Boy, can I share something about that, Joe? Many years ago, we did a survey, and 9 out of every 10 people we surveyed, within 3 months of their home loan, getting their home loan settled and buying the property, they did not know what their interest rate was. They know what their repayments are because it comes out of their account, but they do not know what rate they're on.
Yeah.
And I guess it's fair to say that people should review their interest rate. How often?
Oh, look, if you're not doing it at least yearly, you'd want to have a look at yourself.
Yeah. So because there's always a cheaper lender.
Yeah.
There's always someone out there changing their interest rate.
Yeah.
So are you guys active with your borrowers?
Yep.
You always, hey mate.
Yeah. So look, when I settle a loan from a client, I'll usually contact them a couple of weeks later, and then maybe 6 months down the track, and then after 12 months, and then you do it annually.
Right.
Just to keep in touch.
You're the same?
Yes. Same. Every year.
You're the same?
Same.
Yeah. So you just keep bringing them up saying,
Yeah.
look, there's you say this is your current rate. Your current rate's, 8%, 6%. But I know that so-and-so is doing a 5.5 at the moment.
Yeah.
And I reckon I could get you sweet because a lot of them, their equity's gone up for a start.
Yep.
And also, like if people originally borrow in LMI space, the interest rate is sometimes higher.
Right. Yeah.
So if they've reduced equity or value has improved, then there's a possibility of refinancing them to a lower rate with a new.
Because if the house has gone up now by, let's say it's gone up by 100%, just for argument's sake, they're no longer borrowing 95%.
No, that's right. And they're
borrowing-
under LMI. There's no mortgage insurance. It's under 80%. Rates start reducing once you've
Right.
got
Yeah. So they're borrowing less than 50%, so they'll get a pretty good, pretty good rate.
That's right. Yeah.
Okay, assuming their income and their expenses haven't sort of gone out of kilter. Well,
It's
guys,
even a matter of doing a repricing with their current lender as
Yeah.
well, just to see if there is better rates. Hey, we can take these people elsewhere. Are you going to reprice them? If they do, you stay with them. If you don't, you refinance them
so
out.
you'll ask the lender.
Yeah.
Listen, if you don't fix your price up,
Yeah.
we're going to take them somewhere else.
Yep.
Yeah.
You'll do that for your client.
Yep.
Yeah.
Yeah, that's cool. Well, guys, thanks. Sorry, go on.
We actually work for the client. We don't work for the bank.
Yeah. That's interesting. So, and what's this cost the client? How much the client got to pay you for your services?
Zero.
Usually zero.
Nothing. Okay, well that's a reason to go and see a broker in the first place. Yeah, but so guys, thanks very much, appreciate it. And I guess it was important to talk about Victoria because Victoria's been getting nationally quite a bad reputation.
Do we get that a lot?
Yeah. At a national level, you do. They probably don't say anything. No one says anything in Victoria because they're too scared. But outside of Victoria, people talk about Victoria.
Yeah.
And it's interesting to know that, say, for example, in your territory, that people from other states are buying in Ballarat or around your surrounding areas. That's really cool. And that you're starting to get investors back into your state. Because I heard there was a bit of an exodus of investors out of Victoria.
Investors and Victorians out too.
Victorian people leaving Victoria. Well, but now everything's settled down.
Yeah.
And Victoria's going to come back. And well, that's great, and I appreciate it. So, thanks for your time. I learned a lot today. And the objective of these things, to put these things up on YouTube, is for people to get a good understanding, sort of what the process is like. Because it's not like it's the old days. You used to be able to say, if I earn $100,000, I can borrow. I can borrow $300,000. It used to be sort of like a rule of thumb, and you just go and see your bank manager, and I'm all sweet. That process has changed, and brokers didn't really exist in those days. You just go and see a bank manager, you go and talk to him, and he or she, and you loan approved or not approved. But generally speaking, you get it approved because you knew them. Now it's a lot more impersonal, and a broker does that work for you, and it doesn't cost you any money. And it helps someone like me from slipping up and sort of putting the weights on me.
Yeah.
I don't need any more weight on me as it is. So you want to be able to have a good fighting chance to get the thing approved. And
correct.
At the end of the day, you want that home.
Yeah.
Yes.
That's your dream.
Exactly.
Thanks, guys. Appreciate it.
Thank you
Thanks,
so
Mark.
much, Mark.
Thanks very much.
Thanks for your time.